Hey everybody, this is Jim at SP500chart.com. It's about 4:20 on March 13th, 2013. And before we get started, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. And by the way, I used to play trombone, so that's where I get that big breath to get through those big long sentences. I used to could sing an entire verse of "A Mighty Fortress Is Our God" in one breath. Can't do that anymore. But anyway, where did that come from? Let's take a look. Okay, starting out with a 30-minute chart, you can see that here's our inverted head and shoulders pattern, which is pretty much for right now the driving force, I think, behind what has been going on. It's not a really big pattern either. It took only about 8 days to form and break out. But regardless, it looks like it's doing what it should do. And that is send the S&P up to the mid-1560s. We're not there yet, but by the looks of it, we're going to get there. I might add that I saw a headline just before I was doing the video here. What's the headline? The headline is Dow Jones Industrials hit a new all-time high. And look how it did it. But it is a new all-time high. And but to be honest with you, it's not that impressive, and there's some signals, just like we're seeing in the S&P. There's some signs of weakness, and like I said, we broke that little channel, and now it's kind of hugging that bottom line. Guys, it's not going to last forever. Let's go back to the S&P. We see pretty much the same thing in the S&P. We were in this what looked to be an accelerated channel here off the bottom of this inverted head and shoulders pattern that broke midday yesterday. I mentioned in yesterday's video that line should now provide resistance, but I could easily see the market either just kind of melting up to this target area up around 1565, only 11 points above where we closed today, or I could see the S&P selling off, coming back down to pick up some steam, pick up some legitimate buying interest in the high 1520s, 1530s, then moving up to make that target. If it's the former and we're just going to melt up, I'm going to be a spectator. It's just the way it is. If it is the latter, well, I may be on the field playing the game, but for right now I'm just sticking with what I've got in the way of long positions, and frankly, I don't want to tell you what they are because I don't want you to do what I do in case you would be tempted to do so. You shouldn't be. You should be doing your own research. But let's just suffice it to say that some of them involve precious metals, and another one is I'm in things right now that look technically very interesting just for what they are, but I'm hoping that a couple of these long positions that I'm in, I'm hoping that they can act apart from the market at large. There's one biotech, and we all know how those can do. So it's either feast or famine. But enough about me. It looks like here is our red line that we have just been in and around for the past 7 days. Not really getting technically convincingly above the line, just seeming to gravitate on it. And if you look back on an hourly chart, you'll see that this line goes back a ways. We could probably draw it a little bit more cleanly. It's about like that. and particularly it worked through all of January. The inverted head and shoulders took us down underneath that line solidly, and now we've come back, and it's almost like this is one big, long, protracted, and I guess that means redundant, because big, long, protracted, those things pretty much mean the same thing. A back test of sorts that just is gravitating along this line. And I'm going to tell you now, this is not based upon any analysis. It's not based upon the chart. It's just the feeling I get. And the feeling I get is that, and it's a hunch, that the S&P is going to make that 1565 target, but it's going to make it there on fumes. I just get the feeling that this is really starting to get to be laborious. If you look at where we've come, it's taken us 1, 2, 3, 4, 5, 6, 7 days. Let me get my numbers straight. Well, we're not going to count this gap up day. We'll go to the low on the 6th. On the 6th, the S&P was trading right at around 1538 and change. So it's taken us 1, 2, 3, 4, 5, 6 days to make 16 points. So that's roughly a little bit more than 2.5 points per day. And again, we've seen these long moves before, but I think we're going to hit some resistance up here. I think we're going to come up and make that target, and I think we may find out that these inverted head and shoulders targets, while it is a minimum target, and when I'm talking about 1565, I am talking about a minimum. That means, yes, it can go higher, but it just looks like if it does, it's going to do so on fumes. So, guys, that's pretty much the chart and the analysis for today. Looking at tomorrow, we are back pretty much in this little light blue channel, but let's still watch it. If this breaks, and I would say if we get down to significantly less than, if we get down around 1545 or so, if there's a 9 to 10 point sell-off, then I would think that would be a good sign that we are setting up that move to come down to the 1520s. But gosh, like I said, the headlines, stock market hitting new highs, all-time highs. Well, the S&P isn't doing it. The NASDAQ isn't doing it. The Russell is doing it. The Dow Industrials is doing it. Let's take a look at the transportation index real quick. To look at the Dow Jones transportation average, that looks pretty darn strong. But we got other signs of weakness coming at us from other angles. So I think I'm going to keep my focus on the good old S&P. So you can see here, again, looking at a long-term chart of the S&P. Here's a brown line that we've talked about a number of times. Got over it in 2011. Couldn't get over it in 2010. Couldn't get over it in early 2012. Couldn't get over it in late 2012. But we're now over it again in 2010. So, very interesting stuff to look at. You got a chart like this that looks like it's about ready to roll over, that it could come up, maybe tag that 1600 level, and then it just looks like it might be ripe for a big leg down. And then you look at that Dow Jones transportation chart, and you just go, God, that thing looks like it's just getting started. So anyway, hopefully we get more signals that look like, come to daddy, come on, there we go. Hopefully we get more signals like this inverted head and shoulders. Hopefully we get a top that reveals itself. You hear what I'm saying? If you back off of that long-term chart and look at it on a monthly chart, you can really you can see a lot of things, but you have to realize too that if those things come to fruition, they will also reveal themselves in the details. So it's kind of like a photograph of a crowd of people. This is going to sound like a really strange analogy, but bear with me. Let's say you're at a football game and you take a photograph looking all the way across the stands, and you're looking at a huge crowd of people, and you're getting 10,000 people in your photograph, and you can tell by the way the crowd is responding in mass that someone just scored a touchdown. So you can look at it in a wide picture and see something. But then if you also had a telephoto lens and you just zoomed in on one or two or three people's faces, you could also tell that something's going on. So when we take a look back and look at the monthly chart, let's say, of the S&P, we see one thing. If we look at it on a 3-day chart, we see another thing. Okay? But then, I don't think these things are going to be telling us anything radically different than what this ends up telling us. We're just seeing smaller bits and pieces of it. So look, guys, on that note, I'll end. I want to say hello to our new subscribers. Appreciate your support. And let's see what happens this week. The Dow on a 9-day winning streak hasn't done that since 1996, for what that's worth. But having won today by just a razor-thin margin, let's see what happens with the rest of the week. Take care. Thanks for watching.